Good evening, everyone. If you're watching the recorded version of this, I think we had a slight problem with the sound there, but the sound's back on. So if you're watching the recorded version of this webinar, it was held live on Tuesday, the 20th of March at 8:30, 7:30 in the evening. This is a webinar that we do twice a month with Ayondo, and we take a look at the idea of social/copy trading. So this is where, rather than making your own trading decisions, you're looking to put together what is in effect a team of traders whose trades you follow automatically from your account. So tonight we're going to explain all of that right from scratch, go through how to pick the traders, sort of criteria you might want to look at, then add them onto a real account with live money, one of my accounts, and see how it all works. So that's it. It should take, I think, about 30 minutes. We should be done if you're here live just after 8 o'clock. We're not going to spend too much time on PowerPoint. There's not going to be lots of bullet points during this. We'll be jumping backwards and forwards, but most of the time we're going to spend on the actual trading platform. So to kick things off, we're going to use the PowerPoint for the structure. So the first things we're going to look at the basic principles of this idea of social trading. So that's clearly, first of all, what we want to do is identify profitable traders. Then, when we've identified a group of traders who we quite like the idea of following, we're going to look at building a portfolio. Then the all-important risk management. You know, if you traded for yourself, you know how important managing risk is. It's exactly the same when we're doing this idea of sort of social copy trading. Then how we monitor all the positions using the two Ayondo trading platforms. Right, so let's get started. So identifying profitable traders. What we're going to do first of all, we're going to log into Ayondo's trading platform, browser-based platform, WeTrade. We're going to take a look at the rankings list, so like a league table of traders. Choose the various sort criteria. Profit or loss is the obvious one, but there are a couple of other things as well. Then drill down into that data. So look at a bit more information about how the traders made their money. So let's jump on to the trading platform. So when you log on, you'll go to a window or a screen that looks like this. So this is the rankings list. We're going to change the rankings in a minute, but how it works is if you trade through Ayondo, and you could do this yourself as well if you wanted to. So if you're trading on the Ayondo platform, you can make your track record publicly viewable. Okay, so you can show people how well, or of course how badly, you've been doing. And this is a bunch of traders who do exactly that. So they make all their trades available, their historical P&L, where they've made their money, all this sort of information that we'll see over the next few minutes. And then if we want to, we can choose to follow those traders. So if this one here, AW Mix, if this one here buys the Dow Jones index, the trade will be done on our account as well. So we've got pretty high level view here. There are 547 traders available to follow. I only want to follow 5. I'm following 4 already, so we're looking for 1 more to add. But there's an important filter that I apply straight away, because with the platform, even if you're trading on a demo account, you can make your profit or loss publicly available. Now, my view is, if I am going to follow somebody with my own real money, then I want them to be trading with real money as well. I've got no interest in following somebody who's only trading on a demo account. So I want somebody trading with real money. So let me just sort this by P&L first of all, just to see the raw numbers. So that the best performer, and then we're gonna chop out all the demo traders. So the best performer over the period I've chosen, which is the last 12 months, is Giuseppe. This one, Giuseppe, has cropped up quite a few times actually in these webinars, but over the last 12 months, Giuseppe's made 126% return, pretty impressive. So has more than doubled his account. Maximum drawdown, we'll talk about all this in a minute. Second best performer, 109%. Then we have Thomas down here, 105%. Then a bit of a plunge down to Ultimate Trader, 55.8, and so it goes on. But an important distinction, the top two, Giuseppe and the Venture, have an R next to their name. What this R means, real money. So they're trading with real money. So all of these people down here from position 3 through to position 6, they don't have an R next to their name. So what that means is they are not trading with real money. They're trading on a demo account. So my view is I don't want to follow them if they're trading on a demo account. So I can straight away filter out all the traders who aren't trading with real money by clicking this button up here, RMT. So hopefully you can see that on your screens. So let's click on RMT. There we go. So straight away, the number of traders available changes from 547 to 188. Okay, so I've lost a whole chunk of traders by filtering out those demo accounts. So I've got 188 traders here who are trading with real money who I can follow. Okay, so for me, this is a much more, for my approach, this is a much more sensible list. So we have Giuseppe and the Venture, both more than doubled their account over the last year. Then we fall down to Positive, 47%, Corbachus, 47%, DAX Caller, 32%, Real Money Trader, 32%, and so it goes on. Okay, so we have a list of people. I've sorted them by their P&L. You can sort it by various criteria. But the raw P&L data, how much profit they made or lost, I would suggest isn't the only thing to base your decision on. I think this number here, max DD, this is a really important one because it's all well and good making, in this example, 100%, more than 100% in a year. But let's say for 10 months of the year, you lost money. And by the end of month 10, your account was down 70%. Okay, so you'd lost 70% on the year. Then in months 11 or 12, you just have an all or nothing strategy and end up actually having 100% return for the year. Well, that's great. As an annual headline figure, that looks great. But the fact that along the way you lost 70% of your money, to me, suggests an approach that doesn't really fit with my style. So DD, maximum drawdown, is how much of your profit you want you give back, along the way. So of course, in an ideal world, we've got a decent amount of profit and a relatively small drawdown. So we don't want to have massive levels of volatility. That's an ideal world. So on this one here, on Giuseppe, maximum drawdown was 34%. So that's pretty big, I think. I mean, he has been the best performer, but along the way has given up a third of their profits. If you want maybe lower drawdowns, we're going to look at someone like Positive down here. So 47.8% return over the last 12 months and only giving up just under 14% along the way. So a much lower volatility approach. Real Money Trader down here makes 32%, but along the way gives up 38%. So that's, again, massive level of volatility. And so it goes on. Okay, so we can see, I think sorting by P&L is definitely where I start from, where it comes to looking for top traders. But then to look in a bit deeper, I take a look at their maximum drawdown. Let's click on Giuseppe, though, to find out a bit more about this person. Let's click on this and we'll see a bit more about their trades. Okay, so here we go. This is Giuseppe. And we can sort of have a look at different time periods. So over the last 7 days, it lost a bit of money, lost about 0.6%. Over the last month has made about 5.7%. Last 3 months has made 30%. And today has made 5% today. Very good return today. But let's have a look at total. Let's look at the big picture. So the orange line, that's their performance. So that's Giuseppe's performance in terms of percentage profit or loss. To give us a comparison, because there are plenty of traders on the Aondo platform. Aondo started off in Germany, so there are plenty of traders who trade the DAX, the German DAX index. So down here we have the purple dotted line. That's the DAX. So we can see how they performed relative to the DAX. Let's just walk through and look at this. We saw a pretty bad start for Giuseppe, to be honest. By January 17, he'd been trading for about 6 months or so, and was only breaking even. Had made a little bit, had a bit of a drawdown there, and was back pretty much to where they started. But from March, April last year, that's when the P&L really started picking up. Okay, so we can see, a bit of a bumpy start and then got off to a good move. But it's important to look at a few other factors as well. So let's take a look. So member since the 15th of April, 2016. So we've got getting on for a 2-year track record for this trader, for Giuseppe. However, the other important thing to check is down here. Real Money Trader since June 2017. So it's been live on the platform since April 2016, but up until June, which is about here, that track record was all made on a demo account. Okay, I mean, clearly the switch to real money hasn't affected the performance. Giuseppe's continued to make money, but it's important, to make sure if you're looking at a long track record, let's just double check how much of that was made using real money. So June 2017, real money trader. The numbers in here, performance since the start, since the beginning. So that would be April 2016, up 153%. And then we look at the numbers in a bit more detail. Let's just scroll down a bit. Winning trades, 48% of trades have been winners. I like this number, 48%, because we'll have a look at maybe another trader in a minute, but too many of the traders on here end up having winning trades of like 90% plus. And again, if you've ever traded yourself, you'll know that that is a somewhat unrealistic number. So whenever I see somebody with a very high, very, very high percentage of winning trades, I'm always a little bit wary and thinking, well, does that mean that they have a problem taking losses and they just hang on in the hope it comes back? So the fact that Giuseppe has made 150% over the last couple of years, with most of the trades being losers, suggests, I think, a sensible approach to risk management. Cuts losers quickly and lets profits run. Yeah, so I'm not put off at all by that number. So we can see a sort of a high level view there. Let's scroll down and see a bit more data. This bit for me, the performance, is also really important, because it's all well and good making 100% in a year, but I think, like I said at the beginning, if you have 10 months where you lose money, and then months 11 and 12 you make 60% one month and 70% the next month, it does suggest an approach to trading that has got more in common with gambling. So ideally, what we want to see, what I want to see, is profitable quarters, and no 1 month or 2 months standing out as being absolutely fantastic, really skewing the poor performance. We do have a little bit of that with Giuseppe, but here's 2016. So lost 22% in 2016. Then in 2017, made 145%. So we've got a couple of sort of lumpy months in there. 28% in Jan last year, 21% in April last year, 14 in May and June, 17 in October. So it does have some losing months obviously along the way, but pretty consistent performance. This year's numbers are being flattered. So far this person has increased their account this year by 1/3, but all of that and more comes from January. Okay, so an incredible start to the year, making nearly 35% in January, and since then lost 2% last month and is up 1.86% so far this month. So looking at these sort of stats, these performance stats, can give us a better handle on how these people have made their money. Then we can drill down to a lot more data if we want to, so we can see, well, okay, where have they made their money? What markets has this person traded? So we have Euro dollar for Giuseppe, 14% of trades, Brent crude, Alibaba Group. So a bit of a mix there, a bit of a mix of different things that have been traded, so we can see a bit more information. Okay, and then if we want to, we can see what open positions they're running, any recently closed trades, what sort of profit was made, all of that sort of stuff. And I think Giuseppe does use like a classic long-term trend following approach, so should see some quite good profits in there, and hopefully some relatively small losses. Okay, so that's Giuseppe. We're going to come back to this one in a minute, but let's take a look at another trader first of all, just to contrast this with Giuseppe. So let's just sort this by P&L, and let's look at the venture. Let's see what this person's trades look like, just to give you a comparison. Oh, actually, I want to try and find one who's got a somewhat ridiculous number of winning trades. Let's have a look at positive and see what that looks like. Oh, here we go. This is what I was looking for. So this is the third best trader, best performer over the last year with real money. And it's here. It's this sort of thing here that can make me a little bit nervous. Hopefully you can see that, where winning trades, 98% of trades end up being winners. Okay, so that's 98 out of 100 trades end up being winning trades. So for me, I'm always just maybe a little bit nervous that suggests a trader who has a problem in taking losses. Saying all of that, the numbers are pretty solid for this one, for positive. Maximum drawdown, so biggest amount of profit given back along the way, so in the chart here. has lost 13%. Real Money Trader since May 2016. So we have, again, getting on for almost a 2-year track record. But you can see there's a whole period here where this person didn't trade and only started trading actively again last summer. But since then, the performance has been good. Annual numbers, pretty solid. So 20% in 2016, 47.5% in 2017, and so far this year, slightly ahead, 0.7%. This is quite a common thing to see, actually. 83% of trades have been carried out on the German 30, the DAX. And I think, as I said, the DAX is a favored market with a lot of these traders available to follow on the platform. But there you can see a different approach to Giuseppe, but much higher winning trade percentage, although that does appear to have been managed with a sensible level of drawdown. Okay, so that's our high level view of what's going on with the traders. So what's next? What do you want to do next? Let's say I want to follow Giuseppe. I want to start building a portfolio. So what I'm going to do now is follow the traders, access the portfolio builder on Aondo, set risks levels per trader, then execute on a live account. So let's jump back. So what we're going to do, we'll go back to Giuseppe's page. So we'll jump back to our list here. We'll sort it by P&L. There's old Giuseppe. And then what we want to do is actually add him into my portfolio. So what I do, he's got 74 followers. He's not that popular, actually. I would have thought he'd had more than that. But let's click on follow. So click on follow. Due to a negative performance, your selected trader was downgraded to street trader level. So this is there are various levels that traders can move through on the Aondo platform. And I think because Giuseppe had a bad month a couple of months ago, got knocked back down to the basic level. So there's a warning that comes in there. I'm saying I don't care about that warning. And then we jump into the portfolio builder. So here's 4 traders I'm following already. It looks like, because he's got the same picture, that Giuseppe's got another strategy he's running. So I'm already following this person under Turtle Trader 1964, but this is the one I just followed. So I just followed Giuseppe here. So I've got 5 traders in my portfolio. These 4 I'd put in before on a previous webinar a couple of weeks ago. So these are the 5 traders that I want to follow. So what it does, first of all, it gives me an idealized view of what would have happened if I could follow them over the last year. So over the last 12 months, if I'd have followed all these traders, I'd have made about a 350% return on my account. Unfortunately, of course, we can't go back in time to 12 months ago, follow all these traders, and treble the size of our account. And the usual disclaimer applies. Past performance is not a reliable indicator of future performance. Okay, so we have this idealized view here of what would have happened, but it shows us how it would have worked if we follow all these traders. So this is the portfolio builder bit of the platform. So this is where we decide on things like risk. So let's start looking at that. And of course, if I change my mind on a trader, I can get rid of them from my portfolio by just clicking the X up here to remove them out. But let's take a look at Giuseppe, click on settings. So this is really important, this bit. This sets the level of risk, how the trades will be copied on my account. So, for example, let's say Giuseppe has got a £100,000 account and I've got a £5,000 account. So my account is a 1/20th the size of Giuseppe's. Let's say Giuseppe does a trade where he risks losing. So he buys the Dow at X, places a stop loss 200 points away. And that 200 points, he trades at a size that means if he loses 200 points, he's going to lose £2,000 of his account. So let's say he does the equivalent of £10 a point on the Dow, risking £2,000 on his account. Now I've got a £5,000 account. If that trade was carried out at £10 a point on my account, I'm risking £2,000 out of £5,000. That's a massive level of risk. But what it does, of course, it does it on a percentage basis. So going back to that example, if Giuseppe is risking £2,000 of his £100,000 account, that's 2% risk. So the trade, if I'm following Giuseppe, when it's done on my account, will be done automatically without me interfering, and will be done at a level that's the same percentage risk on my account. So if Giuseppe's risking 2% based on where his stop loss is, then the trade will be done on my account at 2%. So that will be on a £5,000 account, that would be £100, wouldn't it? £100 risk. So hopefully that makes sense. So the percentage risk is the same in this example as the one they're taking. The financial risk, of course, isn't, because we've all got different size accounts. But what I can do, if I want to, I can dial that risk up or down. So I'm choosing 1 times. It defaults to 1 times. So what that means is if Giuseppe does a trade where he risks losing 2%, if I'm at 1 times, then I'll risk losing 2% on my account as well. If I'm not sure about Giuseppe, I can knock him down. I can knock him down as low as 0 and not actually do any trades, but I can knock him down to 1/4. So for example, if Giuseppe does a trade, let's stick with the 2% example, where he's risking losing 2%. If I'm following him, order size 0.25, the trade will be done at 1/4 of 2% on my account, so 0.5% on the account. Or if I'm feeling particularly aggressive, I can bump it up as far as 3 times. So if Giuseppe does a trade where Giuseppe's risking losing 2% of their account based on where the stop loss goes, the stop loss will be at the same position on my account, but I'll be trading at 3 times the size in terms of risk. Okay, but let's just leave it. Let's just leave it at 1. So we'll confirm settings, and you can do that for all the different traders that you follow. I think I've got all mine set at 1, so the same percentage risk for all of them. Oh, I've just removed one. Oh, never mind. So I've got the same percentage risk for all of them in there, and that's it. Okay, so we're almost ready to go. So I've got 4 traders I'm following now because I've managed to click on one and drop one out. We'll leave it at 4 for now. If I'm ready to go, then the next step is to execute on live account. So let's click on there. So a warning comes up first of all. There are a couple of warning screens. So first of all, clearly because these people are active traders, they will have trades that are open already. So Edelmetall has got 193 open trades. Smarty Trader's got 46. Turtle Trader's got 33. Giuseppe's got 31. If I want to, I can have their existing open trades opened on my account now, but that's something I never do, and I think it's something that lots of people don't do, because basically what it means is, let's say Giuseppe bought the Dow a week ago when the Dow was, let's just say, 200 points lower than it is now. That trade, buying the Dow, will be done on my account, but clearly I won't get the price from a week ago when it was 200 points lower. I'll get the price from wherever it's trading now. Okay, so for me, I've got no interest in mimicking any open trades, any past open trades they've got. I just want to follow any new trades. So if they do a trade in the next 10 minutes, yes, I want to follow that. I don't want to follow one from yesterday or a week ago. So execute portfolio, that's it. So we are live. There's a contracts expiries, that's not too important. And that's it. So now I'm live. So I've got in this is one of the accounts I use for webinars. I've got just over £1,000 in the account. My P&L, my running profit or loss, is 0 so far, because I've only just started following these people. But if anyone does a trade while we're doing this webinar, it will pop up in here. So now if any of the people I'm following do a trade, then it'll happen. You know, you'll see it happen in my account. I don't know if anyone's going to be around trading the US tonight. But we'll see. So managing risk, we've done this. We've confirmed traders' individual risk level. We're now going to do this thing called set a loss protection on the account. So there are various levels of risk control here. And I'll talk about this negative balance protection. If you have traded products such as spread betting, contracts for difference, FX before, you'll know there is the classic risk warning when you open an account. You can lose more than your initial deposit. So if you put £2,000 in your account and you're trading something and you have a stop loss, but the market has a bigger than expected move and your stop gets filled at a worse level than you're expecting, you can lose more than is in your account. So in effect, you can end up owing your broker money. With Aondo, they have this negative balance protection. So you can end up, so basically what that means is you can't lose more than you deposit in your account. And there's another level of risk control, and that's what we're going to look at now, your loss protection. So here's my account with £1,083 in. My loss protection, let's click on here. What this is, in effect, I think the best way of explaining this, it's like having a financial stop loss on your account. So I've got £1,083 in the account. What I can say is, all right, if my account value drops to, for example, £700, please close all open positions and stop following any new trades. Okay, so it's like having a financial stop loss on my account. So you don't need to risk everything in your account. It's a way of doing that. Click on save. That's it. It's done. Okay, so there's my £700 loss protection. Okay, and there's that's it. So if I go back to my account, again, I've got no trades going on at the moment. It's just sitting there. Nobody's done any new trades yet. Maybe one will go through before we finish. So let's take a look at how we monitor open positions. So that the web platform that we've been using so far, the browser-based platform, that's called WeTrade. But we can also log into TradeHub for a more detailed view. I have to say, for social/copy trading, the sort of thing we've been looking at today, I don't bother looking at TradeHub, but just to show you how it works, because for me, I get enough information just from that. But just to show you how it works, let's go to TradeHub. So TradeHub, for those of you who've traded on normal inverted commas trading platforms before, this will be the sort of platform you're familiar with. So it's the more bells and whistles trading platform. So it's loading up. Here we go. So let me switch to my, here we go, spread betting social follower account where I'm following these traders. There we go. So you can see there's my account balance, 1,083, which is of course the same amount. Oh, where's it gone? I've lost it, haven't I? Sorry. Which is of course that view there, £1,083. So that's the trading platform view of it. My open P&L, I've got 0 P&L because no trades have been done yet. My account value and all that sort of stuff. So in here, I can do the usual things, like I can look at open positions. I've got no open positions at the moment. I can do things like look at history. So again, I have used this in the past for webinars. So if we pull out some history from maybe Feb, there we go. So there's some old trades from a previous webinar from people I'd followed. So clearly when we're following these people, we don't need to do the trades ourselves. They just go through automatically on the account. And you can see, because I set a low level of risk, these are tiny trades. For example, the 20th of February, at 3 minutes past 8 in the evening. That must have been the last webinar we did. There was a trade done at 3 pence a point on the DAX, the German market. So because I have the risk low and a relatively small account, then the trade size is low as well. So you don't have to take on massive levels of risk to follow people. So with TradeHub, you can do your own trading. So you can do your own normal trading. You can switch to a normal spread betting account where you just trade for yourself. And you can have a look at the people you're following and how they're doing. You can do things such as adjust the stop loss. So let's say someone you're following does a trade on the Dow and puts a stop loss 200 points away. But you think the stop loss should be, I don't know, 250 points away. You can go in and change that if you want to for the trade you're following. But the important thing to understand is if you interfere with any trades that you're following, that then becomes your trade. Okay, so it will be stopped out if the stop loss gets hit, but if the trader decides to take profits manually, that won't happen on your account. So for me, again, my rule of thumb is I don't interfere with the trades. If I'm following these people, I'm assuming they know what they're doing. I'm assuming they think, right, that's the right place for the stop loss, so I'm not going to interfere with it. You can view account history from TradeHub, so you can look at financing costs. You can run account statements, again, in the usual way. If you want to look at the last 3 months of trades, you can run all that, and you can add funds. If you want to top up your follower account, you can do it through that. So we did log in directly from the web platform. You see the normal account figures. We saw those on the account, cash balance, any P&L, all of that sort of stuff. You can monitor and change positions, and you can look at transactions. Clearly there are financing costs because we're trading using leverage, where we put a relatively small sum of money to control a much bigger financial position. There is a small financing cost, and again, because the trade size on my account anyway is dialed right down, those financing costs tend to be pretty minimal, but you can run all of those sort of things as well and run your own account statements. So it's pretty straightforward. Let's just jump back onto the platform. No one's traded yet, and because the clocks in the US went forward a week ago, the US market's actually shut at 8 o'clock at the moment, don't they, UK time? So the US market is just shutting now. So I think there's a chance we won't see any trades go through. But in a nutshell, that's it. So if I just leave it now ticking away, I've got all of these people, these 4 people I'm following. Clearly tomorrow, when the European markets resume, they'll be active, they'll be trading away. And assuming I'm still following them, those trades will be going through on my account. But of course, if I change my mind, I think actually I need to rethink my strategy, I'm not sure about this. If I click on stop execution, the button down here, any open trades that I've got will be closed out straight away, assuming the market is open. If I've got a trade on a UK share, it won't be closed out till tomorrow because the UK market's shut at the moment. So, but I can close that out now, and it stops following any future trades. Okay, so it's very easy to switch it off or switch it on doing that. And when you first open an account, you do have a demo you can play around with. I think it's for 3 weeks, or it used to be 3 weeks. I haven't done it for a couple of years, but I started off with the demo when I first started doing this back in May 2016, I think it was. And the demo can give you a feel for the different levels of volatility of the people you follow and all of that sort of stuff. But that's it really in a nutshell. You know, it's as straightforward as that. So it's more about, I think, you trying to pick a team of good traders to follow rather than, of course, you sitting there and picking the trades yourself. I think it's a relatively low stress way to gain some exposure, some extra exposure to the markets, you know, where you're looking at hopefully relatively long track records and adding those into your portfolio of traders and using that portfolio builder and the settings in there. You know, it's relatively easy to dial that risk up and down to a level that suits you. And if you want to, you can even set individual amounts for the various markets that they trade. But I'll start wrapping things up there. If it's piqued your interest, I'd say give it a go. Like I say, you can run a demo for 3 weeks. You can put money in and set the financial stop loss on your account, so you don't need to risk massive amounts. You can dial the risk right down per trade, down as low as a quarter of the size they're trading. So it's a way to maybe dip your toe in the water and see what it's like. I did blog a little bit about this about a year ago. If you go to my website, jonesthemarkets.com, there's I think about 4 blog updates there of me following a real trader from about January, February last year through to May or June, following 4 traders. If you have any questions, feel free to drop me an email. The best email address for me is david@tradeafter.com. But we'll start wrapping things up there. I'll let you get back to your evening, and the recording of this will be available. If there are any bits you missed, you can always follow the recording. There's a couple of questions. Are the traders funded? No, the traders, it's their own money. So the traders who are trading with real money, it will be their own money. So they're not being directly funded. As 90% of traders fail, you just have to fade the losing traders. I suppose that's one way of doing it. Yeah, I mean, clearly there. If you look at the rankings list on here, let's go back to that rankings list. Hang on a second. Look at the rankings list, and if we look at it in real money, you know, you're right that, you know, most traders will lose money. And if we jump down very quickly, you know, we've got 188 traders here trading with real money. The 10th best performer made 24%. Let's jump a bit further down the list. So by the time we get to, well, let's try and get to halfway through, 70th. So the 90th performer is about break even. So there we go. So about half of the traders with real money are making money, but a relatively small amount of money. Yeah, even if we start off with page 1, the 10th best trader has made 2% a month return. 2% a month return is still a good return. You know, but that's the performance of the 10th best trader. You know, but I'm sure, as we all know, trading is not easy at the best of times. But I think doing this, you can set the levels of risk, and then I personally just tend to review it every 3 months. You know, see how they're doing, and see if one trader has gone massively off the boil, and look to chop them out and maybe replace them with something else. Okay, but like I say, if you sign up with Aondo, you can try the demo account, play around with it for 3 weeks, and see if it's something that fits your particular trading style. We'll wrap things up there. Thanks for coming along. We'll do this one again in 2 weeks' time. And every Wednesday lunchtime, we do the Market Outlook webinar. That's for your own self-directed trading, where we look at levels and opportunities in current markets. But thanks for coming along this evening. I'll stop things there and enjoy the rest of your evening.